Hey, Urgent Alert members, Wiz here with your Urgent Alert trade for the week. Really can't do too much of a portfolio review because I'm trying to reconstitute some of my Urgent Alert positions that E-Trade decided to just take and put into the shit can. So I'm gonna try and put this. This is the last export from a week or two ago of the current or what were the current Urgent Alert positions. So I'll make that a shareable document, just like I did with the primary live trade brief. Before we got shut down, the Urgent Alert portfolio was I think it was Urgent Alert and weekly options that were first. AR was second, accelerated retirement, and then the PLTB was kind of pulling up the rear though. So not too happy that they obliterated, so to speak, some of my on my positions there. Make sure you watch today's sit rep and yesterday's sit rep as well. And if you were an AR yesterday, you heard me make my ground-breaking reorder of my financial Olympians. Goldman Sachs, you are now a bronze medalist, folks. And the day after I make that call, here you go. Goldman Partners cash out. Goldman's partner stake in the company slips below the regulatory threshold that had mandated public disclosures. Folks, they're still running this like a private company, even though they're public. So I'm not bailing out of my Goldman. We'll talk more about this in the PLTB on Tuesday morning at 10 a.m. But for the very minimum, I believe that Goldman's going to channel here after earnings. I beat Goldman Sachs earnings into literally past a dead horse. So strategic mindset, I'm still cautiously bullish. Again, watch the sit rep, today's sit rep for why I'm cautiously bullish. The target for this Urgent Alert trade for the week is going to be Goldman Sachs commit criteria. After mixed earnings, I believe that Goldman Sachs is going to channel for the next couple weeks, especially as all the other houses come out and upgrade or downgrade Goldman. So it's going to be a choppy time for Goldman for the next couple weeks until we see a catalyst drive it higher or lower. And to be honest with you, it's going to be a long weekend for me talking to a lot of buddies that are still at Goldman, but folks that have kind of left the ship to see where they think it's going. So that's my commit criteria. Is I think it's going to remain range bound for the next couple weeks. And again, it's kind of hard to trade off the left side of a chart, but we've been seeing Goldman go between this 230 and 215 range for the past month, almost 3 months here, 2.5 months. So the tactic I'm going to employ is an iron condor. I'm going to go out to August 4th to give this. Remember, this is a world in this type of a market. This is a world away. When you think about a potential tweet or this or that or political stuff. So I'm going to take a look. Let's build this, create spread, iron condor. And I'm going to do the, let me get my strikes in here. I'm going to do the little higher, the 232-ish and a half, 235. And then we'll stick with that 215, 212 and a half. Let's see what that looks like. Yeah, that's kind of split in the uprights. That's the range. The top of the range is 230, but I'm going to give myself, $2.50 little cushion there. Let's take a look at the risk to reward on this. I'm just doing one contract. Whoops, didn't mean to do that. Let me create order. Let's go mid-market. I'll go back to the trade in a second here. I just want to take a look at the risk to reward. It's above, without doing my whole 5% of the model portfolio or not wanting to risk more than $5,000. For the time being, until I get my paper trading accounts back, I don't want to go below a risk to reward of about 1 to 0.2, anything to 0.25 to be honest with you, but 0.2 to 0.25-ish is the lowest risk to reward I'm going to take. This is a pretty high probability trade using current at the money vol with Goldman. There's a 68% probability of the max profit, and there's a 71% probability that this thing at least breaks even. Remember, there's 2 break evens in an iron condor, but I'm getting ahead of myself. Here's the left upright, and if you need, we did a full hour the other night in my final options weapon school class. Options Weapon School session number 8, Iron Condors. Go ahead and watch that if you need a quick refresher or a long refresher, because this will be quick. I'm selling the August 4th 215 puts. That's the bottom of the range there. If the risk is to the downside, that's a $9 move to the downside. That would be a big move out of Goldman. Something. I mean, a big rat would have to leave, Lloyd Blankfein. As a hedge, in case something like that does happen and Goldman Sachs implodes out of the blue or Luke Skywalker hits the Death Star, I'm going to be long the 212 and a half puts. So that's our left upright. That is a bull put spread, and it's also a credit spread. Now, the right upright is, like I said, $2.50 above the most recent trading range. I don't see a rip your face off rally out of Goldman. I mean, they just came out with earnings. The news isn't super. I mean, Dick Beauvais yesterday on Comedy Central on CNBC said Lloyd Blankfein should resign. I mean, so I don't think the risk is to the upside in this trade. So I'm selling the 232.5 and buying the 235s. Again, that's a bear call spread. It's also a credit spread. So these two together facing each other kind of make it a range-bound trade, which is called what? An iron condor. So let me click Save As. Goldman Sachs, 720. Okay. And a credit of 52 cents. I'd go plus or minus 4 cents. I'd go down to 48 cents and all the way up to 56 for today only. If it's outside of that range, I'll send a new text alert if I still think it's a good trade. Okay. So I like the metrics on this one. Let me grab a screenshot of this, and we should be good to go. Like I said, I'm slowly but surely trying to reconstitute all these positions. I still have to get this damn closing my limited partnership account notarized and some blood from my firstborn and all sorts of other crap. So hopefully by this time next week we will be fully up and running with our E-Trade stuff. So. All right, guys, and remember, the individual adjust and eject doesn't come from the total price of the Iron Condor. The bull put spread and the bear call spread have their own adjust and eject, and you guys know what the rule is. Double the credit that I take in for the credit spread is my eject point, and just inside of it, at the losing 75% of the credit that I took in is my potential adjust. Okay. And remember, probably after I press send and send the text alert, I'm going to go grab some lunch, come back, and if I'm not filled on this Iron Condor as the entire thing, I'm going to break it up into two spreads. I'll put on the bull put spread and the bear call spread separately. Okay, that's called legging into it. Which one do you do first? With the stock essentially, well, it's up a buck. It's not flat. I'd probably put on the bear call spread first because, I don't know, maybe there's a little bit more premium, and then the bull put. But, since we're essentially flat, I'm going to leg into it if I don't get filled after lunch here, okay? All right, guys, have a great rest of your day. Happy hunting. Make sure you hedge, and I'll be back with Friday's market wrap-up tomorrow. We'll see.